The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone from Los Angeles. How are you today? Ken Shreve with you. Breakout Investing on TFNN. Number to use to get through, give me a call. Let's talk about this market, 877-927-6648. Quick reminder that my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern on TFNN. If you can't listen live, it's also available as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in. Type in tfnn.mobi on your smartphone browser, and you can listen to the stream that way as well. I write the Ultimate Growth Stocks newsletter at TFNN. If you want to get a free 30-day trial to Ultimate Growth Stocks, you can do that right on the homepage of TFN.com. Just click on the newsletters tab on the top of the page, then investment newsletters, and you'll find information about Ultimate Growth Stocks. I publish every Tuesday, and I send out email, buy, and sell alerts, market updates in between. I do manage a model portfolio with Ultimate Growth Stocks. And finally, I'm going to be going over charts as I always do on my program, and if you want to look at those charts with me, just go to Tiger TV on the homepage of TFNN, tune in to Channel 1, and you can look at those charts live right along with me. All right, let's take a look at this market, see what we're doing here. Nice melt up going on towards the end of the year, I guess you could say. Right now, see what we got going on here. Looks like we have the Dow up about maybe 55 points, 0.5% to 12,162. The Nasdaq up close to 20 points, call it 0.8% to 25.99, and the S&P 500 up 10 points, 0.8% to 1253. Looking at a chart of the Dow Jones Industrials, and you'll see this descending trend line that we've been showing in recent days, and the Dow just sitting right at that trend line. So a lot of people, waiting for these indices to break out over descending trend lines. The Dow is the closest right now. Let's go ahead and take a look at the NASDAQ. I also have that in here, the NASDAQ composite. You can see the NASDAQ is still a ways underneath its descending trend line here, so it still has quite a bit of overhead resistance to work through. And then the S&P 500, let's take a look at the S&P 500, and you'll see that it's actually getting pretty close to that descending trend line. So the technical health of the market still in question here. It's a bit of a frustrating market, because when you see up days like Tuesday, and we had a higher volume decline in the Nasdaq yesterday that was brought about not so much by Europe, but because of that weak earnings report from Oracle. And here we are higher again today with the Nasdaq outperforming up 0.8%. But without volume in this market, it remains kind of a risky, dangerous market, because what we know is that institutions are not playing yet. Earlier this week on Tuesday, we had nice big percentage gains by the major averages. We did have volume come in higher than Monday's session, and it did amount to some sort of follow-through a little bit late, 17 days into a rally attempt. So the follow-through day that we saw on Tuesday could amount to something. I suspect it's going to amount to a tradable rally, although I do still hear a lot of bears out there, a lot of people talking negative about this market. So wouldn't be surprised to see us run a little bit here. What I fundamentally need to see change, though, is my growth screens, because on a day like today where you have the NASDAQ up 8%, it's amazing to go in and look at a screen of 100, 120 stocks with good fundamentals and decent technical pictures, and really not see anything at all that's rising with volume. Now, of course, we are towards the end of the year, and it's unrealistic to think that volume is going to get really heavy in this market, this time of year. There's a lot of people out on vacation, and big money is just not playing. I think that's going to change as we turn the calendar and January starts and the month of January comes, and we'll probably start to see money come into the market, or it could start to come out of the market. We'll have to see. I do have some concerns about fourth quarter earnings season. Certainly the numbers from Oracle yesterday. Let's go ahead and pull up a chart of Oracle. Numbers from Oracle yesterday were not just bad, they were really bad, and it was a big surprise to the market. The stock really took a dive yesterday, and shares are down another 8 cents today to 25.69. Oracle still has its fans out there, but it was a bad quarter. Weakness across all areas of its business. Now there's concern about a slowdown in tech spending, and is it going to be a slowdown not only in the first quarter but the second quarter, third quarter next year? And don't forget, we had earnings from. Or not earnings, but a warning from Intel earlier this month, Texas Instruments, Altera, some of these chip names, warning on results. And so it's, we'll see. I think there's going to be bright spots in fourth quarter earnings season, but when it comes to the broad market and the follow through that we saw earlier this week on Tuesday, how long the uptrend is going to last certainly remains in question. I'm just going to need to see a lot more in terms of leadership coming to the fore, because I'm just not seeing it right now. And when new money does come into the market, whenever that happens, that's when you tend to see the leadership come out, and I suspect that process is going to take a little more time to take shape. I mean, you've got stocks right now. You've got a lot of real estate investment trusts that look technically healthy. Some are very high quality companies, but when you see real estate investment trusts and defensive stocks hitting new highs, can't really make you feel that good about underlying market health. So just kind of treading cautiously. I think I own right now about 4 or 5 stocks in my model portfolio. A lot of them are relatively new positions. I'm just kind of nibbling and seeing what's working out there, but certainly not in a position with the light volume in the market to be aggressive at this point. Volume tracking lower than Wednesday's levels at this point, about 15% lower on each exchange. Yesterday we had 821 million shares trade hands on the New York Stock Exchange. That was slightly below average. Volume today is tracking below that level. NASDAQ volume yesterday about average at 1.8 billion shares. Again, that's about 10 to 15% lower at this point. So it looks like volume on both exchanges today is going to come in lower than Wednesday. All right, taking a look at crude oil. We had crude oil rallied a little bit, up close to 1% today to 99.53. Let's take a look at the United States Oil Fund, USO. You can see here it's up 3 days in a row now, back above support. USO is up 21 cents to 38.32. So its technical picture is starting to improve. Not much in the way of volume behind this ETF, but the USO tracks the spot price of West Texas Intermediate light sweet crude oil. So that's the USO, and then gold today. February gold pretty much unchanged, fell $3. That's only 0.2% to settle at $1,610.60 an ounce. Take a look at the GLD, the Spider Gold Trust, which trades at 1/10 the price of an ounce of gold bullion. That is down right now $1.18. Call it 0.8% to 155.98. Obviously, a lot of technical damage in the GLD at this point. You can see a big break below the 50-day moving average earlier this month. And now look at this 200-day line. You can see how it goes up, bumps up against the 200-day line, and is still trading below that. So GLD looking pretty bearish right now. All right, more good economic today. That's good to see. It's kind of nice to see Europe, more by and large out of the headlines for at least a couple of days. I mean, there was some good economic data out of Europe. Was it just yesterday or the day before? Some business sentiment index in Germany. Business confidence came in better than expected, but by and large, not really hearing much out of Europe, and that's keeping buyers interested in U.S. stocks for the time being. But on the home front, earlier today, weekly jobless claims. Pretty good reading. They fell 4,000 to 364,000, the lowest level since April 2008. So claims right now firmly under that 400,000 level. Good to see. Meanwhile, U.S. economic growth was slower than expected in the third quarter, but not too bad. The economy grew at a rate of 1.8% compared to a prior estimate of 2% growth. University of Michigan also came out with its final reading on consumer sentiment for the month of December. It rose a little more than expected, came in at 69.9 from an initial reading of 67.7. So some pretty decent readings in consumer confidence lately. Tomorrow, pretty busy day of economic data, durable orders for November, personal income and spending for November, and also new home sales for November as well. All right, let's move on, take a look at some earnings reports today. Bed Bath & Beyond. The numbers weren't too bad. The outlook for the current quarter was a bit soft, but Bed Bath & Beyond, known for being a very well-run retailer, but the stock is getting hit pretty hard today, down $3.85, 6.3% to 57.58, crashed below its 50-day moving average today, firming up at the 200-day moving average right around 56.41, but shares under a lot of pressure today, despite reporting a 28% rise in quarterly profit to 95 cents a share. One of the issues here may have been decelerating revenue growth from the prior quarter. In fact, revenue growth has slowly been decelerating. In other words, the rate of growth has been slowing down in recent quarters. In the latest quarter that they just reported, revenues were up 7% from a year ago to $2.34 billion. But Bed Bath & Beyond selling off today, down 6.3% to 57.58. Mentioned the weak numbers from Oracle earlier this week. That fueled a 1% decline in the NASDAQ yesterday. Typically, when you have a follow-through day that we saw on Tuesday, and then you see what was really distribution in the NASDAQ yesterday, you had a 1% decline. Volume rose from Tuesday's levels. Typically, you don't like to see distribution like that so soon after a follow-through day. So that's a yellow flag to pay attention to. The one thing about the NASDAQ, and let's go back and just pull up the NASDAQ composite again. The one thing, the bright spot behind the NASDAQ's performance yesterday was, you can see it did manage, after early weakness, it closed up near its session high. So even though it was down 1%, there were buyers around late sort of lifting it off its intraday low yesterday. So not a great performance by the NASDAQ yesterday, but it could have been much worse. Also in earnings, let's take a look at Tibco Software, TIBX. This is a software name that got pulled down yesterday. A lot of software makers got crushed yesterday on Oracle's weak results, but shares of Tibco up $1.84 today, 8.4% to $23.84. Good numbers from Tibco. So, all right, folks, going into our first break, stick with us. You're listening to Breakout Investing on TFNN. We'll be right back.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedys and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Always appreciate you listening in. Thanks very much, and happy holidays. Right now, we've got the Dow up about 65 points, 12,173. The NASDAQ outperforming, up 22 points, 25.99. And the S&P 500 up close to 11 points, 12.54. Another low-volume rally, another rally where I look inside my screens and I'm seeing just some kind of wishy-washy action. Nothing really exciting. I'm really looking forward to the time where this market does get exciting, where the market starts to yield technical breakouts in heavy volume. During the follow-through day earlier this week on Tuesday, I think I could count on one hand, and that may be giving it too much credit, but there may have been one or two heavy volume breakouts on Tuesday on the follow-through day, and outside of that, I just haven't seen much. And again, we're at a time of year where it's going to be tough for volume to come into this market. So we'll see how the market trades during the first couple weeks of January. Hopefully, we'll start to see slowly but surely signs that new money is coming in from the sidelines. That's where the new leadership is going to come forward, and it might take a little while longer for it to happen, but it's not going to happen without institutional buying. And I'm really still not seeing a whole lot of that going on right now, and that's okay. It just means that I'm being patient because I don't want to force the issue. You kind of feel like when you see an up day like today, you want to be involved, but when you're looking long and hard for something to buy and it's just not there, you can't force the issue, because when you force the issue, that's when you start having some problems, and you end up starting to cut losses unnecessarily, because you made a buy when you broke a rule. You either bought when volume was light, or there may have been some other issue. So don't force the issue. Nothing wrong with being patient. And okay, so that's it. Before we went into break, we were talking about earnings from Tibco Software. A lot of these software makers really got slammed hard yesterday. The numbers were pretty good from Tibco. Earnings up 35% from a year ago to 42 cents a share. Sales up 20% to $289.5 million. So you can see the stock really got hit hard, closed up near its high. I think Tibco hit an intraday low of $20.04 yesterday, managed to close all the way up at 22. Big gap up today, where the stock was recently trading around 23.84. Still a lot of technical damage in Tibco. This is an example of a stock that I would not, some people are going to buy it down here thinking that it's the start of a new uptrend, but a lot of institutional selling in Tibco, and this is one that's going to have to prove itself more. You're going to need to see much more in the way of institutional buying. Seeing probably a little bit today. But when you see the volume behind yesterday and then some other heavier volume declines last week, this is a stock that to me looks like it's still under some distribution here. All right, take a look at shares of Akamai Technologies, AKAM. This company made an interesting acquisition. The stock is up sharply today, up 19%, $5.08 to $31.75. Akamai bought a cloud services firm called Contendo. Small acquisition for about $268 million. All cash. Akamai's technology helps. Basically, it helps speed up online video streaming on the internet. So apparently investors thrilled with this acquisition, even though it's pretty small in size, $268 million. All right, let's take a look at some names performing pretty well here. I go through growth screens every day, and always on the hunt for fundamentally and technically healthy stocks. And Intuitive Surgical is still interesting here. ISRG on the NASDAQ, nice little base forming here. The stock is up $7.25 today. That's 1.6%. High price stock here, $447.98. So Intuitive Surgical is actually interesting, because to me it looks like it could be on the verge of a breakout here. What I don't like is just the lack of volume in the stock. Okay, it's not clear to me that institutions are moving into this stock. Too many low volume gains in recent weeks. Technically it's healthy. It looks poised for a breakout over 449. The $449 price level is going to be right over here. You could even call this an entry point, 445, 446 right here. But what you have here, the move right here is just a low volume move. Okay, so I like to buy when I like to ride the coattails of institutional investors. Really, that is the key to making money in growth stocks. You need a healthy market. You need institutional buying. So ISRG looking pretty good here, but no volume at all yet behind the buy. So we'd like to see more signs of accumulation. All right, folks, stick with me. I'll be right back. Breakout Investing on TFNN.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to TFNN.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Went into break talking about intuitive, surgical, high-quality, institutional quality growth name that is setting up nicely, just waiting for volume to come into this stock in the oil and gas sector. Interesting name here. Services company called Oil States International. Stock is only up 25 cents today to 75.44, but I like the technical setup here too. Going to keep an eye on a swing point for Oil States at 78.53 right here. The question I have with ISRG, OIS right here, and just about every other growth stock I'm following, when is volume going to start to come into these names? I'm not sure that risk on trade is exactly working right now. Again, you've got a lot of real estate investment trusts hitting high. Certainly a lot of growth names are under a lot of pressure today. Some of these restaurant stocks like Chipotle, we're going to take a look at some of these in in a bit, but Chipotle, Panera, Buffalo Wild Wings under a lot of pressure, and many more too. So I'm not sure that growth stocks are exactly in favor here, but Oil States International is a growth name. Pretty darn good fundamentals. So again, the swing point for Oil States is 78.53. That's going to be its high right here. So if we get a volume pop in this stock at some point down the line, you could get a viable breakout here. But the fundamentals at Oil States International, not only has the company delivered excellent earnings and sales growth in recent quarters. Revenues were up 53% year over year in its latest quarter. In the third quarter, they did $902 million in revenue in the third quarter, again up 53% from a year ago. Earnings up 90%. This year, annual earnings 76% from 2010, and in 2012 they're expected to rise about 20% or so. So excellent growth prospects. Valuation still pretty cheap, so Oil States International looking pretty good here, but patience. You got to be patient. You can't, you don't want to buy here in anticipation of a move. It is showing decent signs of accumulation. Volume trends in this stock have been better than a lot of other growth names I've been looking at, but it's still a little bit early. Another bright spot in the market here is Visa. That's ticker V. Visa looking a lot better than MasterCard right now, frankly. MasterCard at last check was down pretty good today. But shares of Visa now down 39 cents to $100.33. Visa is one of the few stocks where actually volume has been coming into the stock. It's acting pretty well. You had a recent breakout here over 98.60 was your swing point. You can see volume increasing, so there was some pretty decent volume. Stock is near its session low today, but Visa acting well. Let's look at its competitor, MasterCard, because like I mentioned at last check, MasterCard was underperforming today. Not too bad, down 1%, but still underperforming. Shares of MasterCard down $3.86 to $370.32. So still holding above its 50-day moving average. This is regarded as a market leader. The issue with MasterCard, when you compare it to Visa, with Visa you have a pretty discernible base and buying area. MasterCard, if you look at its daily chart, it's really kind of tough to glean a buy point. It tends to trade kind of, all over the place, wide and loose intraday price swings. Let's just take a look at its weekly chart here. And again, you kind of look at the bases that this stock here kind of formed a base here. Big reversal here, then just started to move higher. A breakout here. I'm not sure if that was a breakout from a base or what, but it's been a market leader, but just kind of tough to discern a good buying area for MasterCard. So like Visa better than MasterCard. Visa, there's been pretty decent volume in the stock behind up days recently. So, all right, folks, stick with me. Another break. We'll be coming right back. TFNN, Breakout Investing on TFNN.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but two exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedy's and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you Pathways to Wealth.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone. Yeah, so despite another day of gains for the market, there's no shortage of growth names under quite a bit of pressure here today. Not talking major league big percentage declines, but the restaurants week today. Some of the leaders. Here's a look at Chipotle Mexican Grill. Stock is down $2.43, 0.7% to $331.63. So Chipotle under some pressure. Let's take a look at Panera, another one of my let's just say it's a stock that has a lot of qualities that I like to see in a stock. Accelerating revenue growth in recent quarters. Shares of Panera, after hitting an intraday high of 140.89, the stock is now trading at 138.57, down $1.70, 1.2%. So still holding above support, under a little bit of pressure today. And also Buffalo Wild Wings, BWLD, another high-quality restaurant in terms of the management team, good earnings and sales growth in recent quarters, strong balance sheet, very well-run company. Shares of Buffalo Wild Wings down 71 cents, 1.1% to 66.65, and with Buffalo Wild Wings, actually you did have a recent breakout, so technically a healthy stock. It cleared 65.92 was the swing point right here, and there was some decent volume. Okay, the stock came off its lows and broke out over that swing point. So whether or not the breakout is going to work or not remains to be seen. Volume is pretty light. Stock remains under, looks to me like it remains under net accumulation here. So we'll see if Buffalo Wild Wings can eventually keep going. But down today, underperforming a little bit. Doesn't look like volume is real heavy. So a lot of other growth names under pressure. Really, you look at a name like Biogen IDEC, BIIB. If this market were really healthy, and especially on an up day for the market like today, I would expect a high quality name like Biogen IDEC, to be bouncing off its 50-day moving average with some decent volume. And if you look at the chart here, you can see, it really doesn't look like it wants to firm up at the 50-day line here. In fact, it's trading slightly below that support level today. Shares of Biogen down $1.06, close to 1% to 110.43. But we had follow through earlier this week. When you have follow through, you expect some of your leaders to, that are coming down to support levels, to firm up there and to find support. I mean, if it's a strong stock, you should see buyers come in and support the stock at a key moving average like the 50-day moving average, and that is not the case with Biogen IDEC. Other growth names underperforming today, under pressure. Ulta Beauty. This is a stock that I really did not, it looks like a late-stage base to me. Ulta Beauty recently, last week, it broke below its 50-day moving average. Stock is down another 2% today to 64.48. So a lot of high flyers under pressure here. It's when you target the types of stocks that I do, you just have to be very, very careful in this market environment, because we've got a good update for the market today, and I'm seeing a lot of red in my growth screens. One breakout, I think I mentioned this on Tuesday's show, but Salix Pharmaceuticals, a company that makes drugs used to treat gastrointestinal diseases. Salix Pharmaceuticals was actually a good breakout on Tuesday. Good heavy volume breakout. One of the very few that were around on Tuesday. It actually followed through a little bit on Wednesday. It's hanging in there pretty good today. Stock down 79 cents, 1.7% to 46.93. The breakout point was just over 45 right here. So technically still in buying range here. Salix is a name that is probably not familiar to a lot of you, but it is in terms of earnings and sales growth and just overall execution, the company is pretty strong on a lot of different fronts. It has a market cap close to $3 billion, very liquid with an average daily volume of just over 1 million shares. And when you look at a weekly chart, let's go ahead and look at a weekly chart of Salix. What you see is, a pretty healthy stock here. And I wrote a little note on the chart. Salix still in the early stages of a price move. You can see a big long base that the stock is trying to break out of. Now, if this market continues to chug higher and we eventually start to see volume come into the market, this is a name that I think has the potential to outperform. In fact, the biotech space in general looks pretty interesting to me here. Another name that I've mentioned in recent shows that is still worthy of attention here: Cubist Pharmaceuticals, CBST on the NASDAQ. Cubist Pharmaceuticals is interesting. Earlier this month, the company initiated a phase 3 trial of a drug called CXA201 for patients with complicated abdominal infections, and earlier this year the same drug, there's another phase 3 trial going on for the same drug in patients with urinary tract infection. So its main drug is Cubicin, which is a sort of antibacterial drug, but Cubist looks pretty strong here. The stock is up 8 cents today to $40.01. You had a recent breakout over 39. Let's swing over and take a look at a weekly for Cubist, because this is where it gets very interesting. I can tell you right now that, in terms of technical structures that I'm looking at in this market, it doesn't really get much better than this, because Cubist is in what's called a classic base-on-base pattern. It had a base that formed right in this area here. It broke out, hit a high of 40.45, and has now settled into a second base. So this second base right here, sitting on top of the first base, is called an entire base-on-base pattern. And Cubist looks interesting here, and it's just another example. If it can bust out over that 40.45 price level in heavy volume, it's going to qualify as a technical breakout. But it's really all about accumulation. I really want to, when I buy stocks, I want to really feel like I'm riding the coattails of institutional investors. Buying low volume breakouts is generally pretty risky strategy. Okay, so Cubist Pharmaceuticals, biotechs look pretty darn good here. All right, folks. Coming back shortly, final break of the show. You're listening to Breakout Investing on TFNN. We'll be right back.
folks, this is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also, a regular guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
All right, folks, welcome back to Breakout Investing on TFNN. As we head into the close here, let's see where we're at with the major averages. Looks like we've got the Dow up about 67 points, 12,174. NASDAQ up 22 points to 2,600, and the S&P 500 up 11 points to 1254. Mentioned some whole bunch of REITs doing well. Real estate investment trusts showing technical strength out there. Here's a look at Digital Realty Trust, DLR, on the New York Stock Exchange. Shares of DLR up 24 cents today to 66.20. You had a recent breakout for DLR over 65.22. Heavy volume breakout? No. Kind of a low volume breakout, not a whole lot in the way of buying demand here, but a REIT that is still holding above that buying area of 65.22. We can also take a look at HCP, another REIT with a fairly clean balance sheet, also showing relative price strength. The buying area for HCP was 40.87. Basically broke out over the high on the left side of this base right here, but shares of HCP today outperforming nicely, up 1.6% to 40.68. And also in the REIT space, a kind of a larger company, Simon Property Group, SPG. Another nice base taking shape here as well, 131.21. 131.21 would be your swing point here. The stock is up just over 1% today to 128.99. So technically hasn't broken out yet, but money clearly flowing into REITs here as aggressive growth stocks generally remain out of favor. Will they come back into favor in 2012? They will at some point, no question about it. We'll have to see how when January comes and we have fourth quarter earnings season. A lot of earnings reports are going to be out towards the end of January. I mentioned I'm a little concerned about fourth quarter earnings season, just in terms of what Oracle had to say earlier this week, and warnings recently from Intel and Texas Instruments. I think there will be definitely bright spots in earnings, but it's really how the market reacts, and really the key to this rally keeping going. And if indices can break over these resistance levels that they're under, it's going to be predicated on when new money comes in from the sidelines, and I just haven't seen a whole lot of that happening at this point. Let's take a look at shares of Nike. That stock had nice earnings yesterday. Strong day for the stock. This is another example. I mean, you just don't, you get good numbers from Nike. Stock is building a base. Had a nice rally yesterday. You can see right here, very heavy volume. Looks like it's about to break out in heavy volume. Now today, stock's down 1.7% to 94.70. The price action in Nike also makes me a little bit concerned about the underlying health of this market. So Nike, nice earnings report. Shares under pressure today. Let's take a look at a weekly chart for Nike, and here it is right here. And with Nike, it's just kind of looks like a hesitant breakout at this point. And if this market were really right, we should see convincing breakouts in heavy volume, not hesitant breakouts. But the swing point for Nike is 97.68, and the stock is having problems getting going. All right, coming up tomorrow, folks, we've got economic data, durable goods orders I mentioned. We've got personal income and spending tomorrow, new home sales. So, hey, hopefully we rally, finish the week on a positive note. We'll see what happens. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 Eastern. I'll see you back here Tuesday at 3 o'clock for the next edition of Breakout Investing. Take care.